Okay, infrastructure is a big talking point, as always, and how to build out infrastructure and the need for it. But the big issue right now is how to find the money for infrastructure. And who better to talk about that than IDFC. Vikram Limaye is Managing Director and CEO with IDFC. He's with me here right now. Thanks very much, Mr. Limaye.
Thank you.
Great to have you with us here. Is finding the money the biggest problem?
I don't think money is going to be the problem if you actually have the right framework to attract investments in infrastructure. I think what we've experienced over the last 3-4 years is the fact that while you can talk about returns to developers being suboptimal or the stress that banks are facing surrounding asset quality and infrastructure as the outcome, the cause of that outcome really has been execution challenges and operational risks. There have been certain bidding criteria that were probably flawed, such as in the power contracts where you had a fixed price that was bid, whereas the raw material cost was really not frozen, and therefore you had some risks that were taken by developers. But I think largely the operation and execution risks have resulted in financial risks. And therefore what I think needs to be done is you need to get people comfortable that the execution risk in infrastructure has come down quite significantly, because the investments required are large, and you can't have capital that gets committed that remains unproductive for long periods of time, which is what has actually happened in certain cases. And the government's doing its bit to try and sort out the problems since it's come into power. And the largest issue really is in the power sector, and whether it's the availability of coal or gas or the tariff issues, I think the government is focused on sorting them out. The concern really is that given where we are, corporate balance sheets need to get recapitalized in a very significant way. And bank balance sheets are also stretched in terms of asset quality as well as in terms of the availability of capital. So from that perspective, it's not going to be easy to get people to commit to new projects right away.
So what you're saying is even if the government were to create the framework and sort out these tariff issues and a couple of other things, people aren't in at least the private sector isn't in the shape to actually take advantage of those things and go out and invest. I mean, they can't. They don't have the money.
Not immediately, because I think the assets that they've already got on their books first need to become productive. So all the issues surrounding those assets need to get sorted out. They need to start generating cash flows. Those corporates then need to start servicing debt, paying down debt. The equity markets hopefully will then re-rate the stocks, and they'll be able to get more capital from the equity market. So all that takes some time. I think in the interim, what will have to be done is the government will have to figure out a way to bridge that gap, which could be 18 to 24 months before the private sector becomes a lot healthier.
What you're saying is the government has to spend. I mean,
the government will have to think about some version of public investments in infrastructure, and they're doing a portion of that in the road sector. So out of the total number of kilometers that they're planning to bid out this fiscal year, which is approximately 5,000 kilometers, almost 2/3 of that is likely to be through EPC contracts. And the balance is likely to be through BOT. That's also because if the entire 5,000 kilometers were put up for bid, I'm not sure there's capacity in terms of equity to be able to bid for all those projects.
Sure.
And so similarly, they'll have to do other things in order to try and bridge the gap between now and when the private sector is able to invest in a large way, to get growth going and to get the investment cycle back. Because I think asset creation and getting core infrastructure on the ground is absolutely critical.
What you're saying is that time period is 18 to 24 months at least,
yes,
right?
I think so.
In that interim period, the government will have to actually expend. What about foreign capital?
See, the problem is, foreign capital is not going to lead unless domestic developers and domestic capital is comfortable investing in infrastructure. Given everything that's happened in the last 2-3 years, it's important for risk appetite and investments from our domestic businessmen and entrepreneurs to return before you can expect foreign capital and foreign companies to come in. And so I think while there is a lot of interest, and even here at Davos there's been a lot of enthusiasm surrounding the new government and the hope that it will deliver, etc., etc., the reality is that I don't think they're going to jump in first. I think you need to have some sort of a demonstration effect where either the government has created assets on the ground and has demonstrated it's feasible to create assets of size and scale in some defined time frame, or the private sector has invested in new projects that have come up in a timely way. Land acquisition has to get sorted out. So once all those things happen, then foreign capital will. I mean, right now you see a lot of interest from, say, the pensions and sovereigns, but they're largely focused on operating assets, which are obviously from a risk perspective much lower, because there is no construction development risk. They're just buying or investing in cash flows. So, and that is also important, because that helps developers churn assets and hopefully, you know, reduce their leverage and over time get equity capacity to invest in new projects.
Well, what do you think, I mean, of what the government is doing in terms of land acquisition, clearing that up? I mean, those are some of the operational risks which led to financial risks later, right? Coal, of course, now the coal output is being ramped up. I mean, Mr. Goel earlier told us that Coal India will produce 1 billion tons of coal in about 5 years. They do about 450 right now. So, I mean, plans are afoot, but what's your sense?
No, I think the land acquisition changes are exceedingly important. I think everybody recognizes that. And I am pretty sure that in some political framework, the government will get those amendments done, because I think it's critical. It's not only infrastructure related, but also in general. If you want to get asset creation in India, land is the key raw material for that. And if you're not going to be able to acquire land, you're not going to get any industrial activity going. So it's important to get the land acquisition bill as a more balanced bill. And I'm pretty sure that it will happen. As I said, the government is focused on getting the coal blocks that were cancelled by the Supreme Court back into auction mode, so that the power producers get enough coal. I think Coal India's production over the last couple of quarters has also shown an increase, which is a positive sign. I think the other issue that needs to get sorted out is gas-based projects, and from what I understand, there is a framework that's being developed for gas pooling, where imported gas and domestic gas would be blended to offer a blended price for gas, so that these projects are able to fire up at a certain minimum PLF to be able to at least service debt. So all these are things in the right direction. I think they will ultimately help sort out cash flows and get the corporates and banks to once again come back into infrastructure in a very big way. I think the opportunity is very large. The need is exceedingly important, and unless you get core infrastructure in the country, I think whether it's getting your manufacturing sector ramped up or anything else is going to be very difficult to do. So it is really the foundation of anything else that we want to do in the country, whether it's core infrastructure or social infrastructure, and both are equally important.
Mr. Limaye, thanks very much for your time.
Thanks
Great talking to you, sir.
Thanks
Thank
for
you.
being here. Bye-bye.